Well, good morning. It is 8 o'clock sharp here on the west coast of the United States, 11 o'clock on the east coast. It's time to get started. So welcome to followmetrades.com and our Saturday scanning session. We're going to be looking for some great trades this morning. So thanks for being here, and good morning to Ottaviano. I hope I said that right. Assad, Paul. And for the rest, make sure you can locate the chat window. Please ask questions and make comments as we go. And later in the session, I'll be offering to analyze any trade symbols that you're interested in. So you'll need the chat window for that. So in the Zoom control panel there, so make sure you can find the chat. And go ahead and type in where you're calling in from, what city, what state, what country. It's always a fun way to get started. New York. Philly. I can look at Forex. I don't focus on trading Forex, but I can certainly look at some that people are interested. Penelope, Huntington Beach, New Jersey, Seattle. Hey, Mark, I'm just south of you down here in Olympia. Illinois, Dublin, California, Huntington, New York. Virginia, hey, I'm glad you could make it. Virginia from Indianapolis, South Carolina, Memphis, Venice, Florida. North Pole, Peter. All right. I think you're the first North Pole caller. Windsor, Ontario, San Diego. I bet it's warmer down there than it is here in the Seattle area. LA, nice. All right. Well, let's go ahead and get it rolling here. And again, I'm Dean Jenkins, founder of followmetrades.com. And I'll be presenting today. And again, this is Saturday Scanning, looking for next great trades. So we're going to go ahead and get started. Just a quick disclaimer before we rock on this, that hey, I'm a trader. I'm not a financial advisor, and I'm not giving financial advice. I'm going to be looking at trades using methods I use to trade on my own account with my own money. I'll identify trades that I think are good, entry points, stop points, targets. But whether any individual places a trade, places an order, makes a trade, strictly each person's decision. Only you know what's appropriate for you and your account, what your risk tolerance is. And of course, all trading and investing involves risk. So I'm not giving financial advice. I'm sharing what I do for education and information. All right, so just a quick, I know several of you, we haven't really met yet. Some of you were invited by other trading professionals. So my name's Dean Jenkins. I've been investing and trading for about 20 years. I really got started when I was working for Intel Corporation. I started in '93, and they offered us, employee stock purchase and incentive stock options and stuff. And that got my interest because, boy, for a long time there, Intel stock, just doubled and split and doubled and split every 2 years like clockwork. And that's a pretty good deal. I want to learn more about it, so I started trading other stocks. I ended up getting my MBA from the University of Washington, and I was a fundamental trader for quite a while, studying balance sheets and earning statements and products and management and all this kind of stuff, and really got mixed results. I got pretty excited about the .com thing when it was starting to get going, and then felt some of the pain when that bubble popped. I totally gave up on the market for a while in 2007. I actually got out right before the crash, and that was just luck, not skill at that time. But after the crash, I just couldn't stay out. Before the crash, I just went to cash. I was like, this is just too frustrating. I'm just not getting great results. After the recovery started, I just couldn't stay out, and I ended up buying Bank of America at $5 and took it up to 12. And that was a winning trade, but the funny thing was it was a very stressful trade because I didn't have a trading method. I didn't really know when to get out. Should I, am I going to give away profit if I get out too soon, or if it pulls back, or all this thinking that goes on without a clear black and white trading plan. So I was stressed out. And about 2010, I got really interested in technical trading. I made a lot of mistakes. I bought a lot of magical indicators that were going to just make trading easy. And I think we all have to go through that. But I finally centered in on a trading methodology. I found a good mentor that I connected with and offered really, really solid advice. And about 2012, I settled in on the current system I'm using, and started getting consistent profit. So it's a journey. You know, it takes time to get there. And then in 2015, I launched FollowMeTrades.com, the company that I'm running now. So stay with me during this presentation. What I'm going to do today, this is scanning. We're going to be looking for great trades. So first I'm going to explain the setups, because if I pull up a chart and start saying I like it or don't like it without telling you what I'm looking for, that would be confusing. So I'm going to explain the setups I look for, the tools I use. Then I'm going to walk through my scanning technique. Then I'm going to go find some great trades. And then toward the end, I'll be happy to look at any stocks you're interested in. Who knows? I might like some of your ideas and get some new ideas. Often I get them just like this in sessions just like this. Once we have some great trade ideas, if we got time, I love to trade with options, so I'll go find the best option contracts for our top trade candidates. So stay with me if you want to get the most out of this time, and if you're multitasking, you might just miss a great trade idea. All right, so let's go do this thing. Just quick, my trading resume, what results am I getting? It's a fair question. If I'm going to present, you're going to listen. I should have some good results to talk about. Here's my results for the last 5 years on my website. This is my homepage, followmetrades.com. And you can see I'm not, we don't have any Maseratis or yachts or jet planes here telling people that you're going to get instantly rich. You're going to take a $10,000 account, turn it into $1 million account, because I don't think that's realistic. To get outsized gains, you got to take outsized risk, and I think it's more about solid, consistent gains. And you can see here in the shaded yellow, we're getting solid, consistent gains year over year. We're always beating the indexes. Even on a year like this, where the indexes are going pretty much straight up, we're still beating them. And I believe in complete transparency. And so for the last 3 years, where the details I had, easily available, you click on one of these buttons and it pulls up every single trade I've taken year to date, what the symbol was, winners, losers, and there definitely are losers, right? There's no free lunch, and the reality is some trades lose. All right, so complete details on every trade. My trading statistics are there. And I also believe that if I make claims, they ought to be verified and backed up. So I have an external CPA firm who audits my statements now. What I post on the website, I started this 2 quarters ago. Each quarter, I give them my brokerage statements, and they come audit them and compare them to what I'm putting on my website and publish a report on that. So that's a bit about my resume there, because ultimately it's all about the trading results, right? Nothing else at the end of the day matters. So I'm going to talk about my trade setups. Here's the things I think are just essential that I learned on my journey after making many, many, many mistakes, right? Was to be consistently profitable as a trader, you need these 3 things. First, you got to have great trade setups, right? You got to have a method for identifying trade setups. I have a method. It's not the only one on the planet. Other people have other methods, but you got to have a consistent trade setup methodology that has high probability outcomes and great reward to risk ratios. So that's the first thing. So what do I use for trade setups? Well, I'm going to walk through a handful of tools and analysis techniques that I use, and I use them together. I don't key off of any one data point or any one analysis. I like to see them stack up and increase the probability of trades. So one of the things I use is the Ichimoku cloud, right? And you can see the Ichimoku cloud is the shaded area on this chart, and then there's a couple lines called the Tenkan and Kaijun. When you get these crossovers of it, these are basically like simple moving averages. They're just calculated a little bit differently, and I think a little bit better. So when we get a crossover of a fast over slow up above, as price is breaking above the cloud, that can indicate a new trend forming. And then the cloud also projects out into the future support and resistance areas. And you can see the shaded area, the top is a green line, the bottom's a red line, and the region between there is shaded. What that's projecting is support area for that trend, for as long as the trend continues. And the thicker the area of the cloud, the stronger the support. And you can see it really does it. Price pulls down to the cloud and then reverses and continues up. That's really how price moves in higher highs, higher lows, higher highs, higher lows. And it's projecting out into the future. And so I think the Ichimoku cloud is a really, really good tool for confirming a trend change when it breaks and projecting some support and resistance areas in the future. So I use that in my trading every day. I also use Elliott wave. I use a very simple, repeatable form of Elliott wave. I know a lot of people, when they hear Elliott wave, kind of roll their eyes, and they studied it or seen other presentations where it's just overcomplicated and it's not reproducible, and Elliotticians argue about wave counts. Man, I keep it simple. I'm just looking for a big impulsive move. We call that wave 3. I'm looking for a correction afterwards. It's called wave 4, and then a continuation of that original trend. These are the only things I'm trying to trade, right? 1 and 2 are too small. ABC can be really tricky. So all I'm looking for, I only have 3 trade setups, right? A new trend, a correction to that trend, a continuation of that trend. It can go up or down, bullish or bearish. I'm a simple guy. I like to keep it simple. And these things are actually pretty easy to spot on a chart if that's all you're looking for. Do I know of a free download or script for Elliott wave for TOS? I don't know of a good script for Elliott wave for any platform. What I've found over the years is you got to look at charts and you got to count waves manually. I haven't found software, I've looked at a lot, that consistently and accurately counts waves. They can suggest them with some degree of accuracy, but not enough to trade off of. That's my opinion. I use Dow theory in my trading, and this is a portion of Dow theory. Charles Dow wrote his theories back in the late 1800s, the 1890s, right before the turn of the century. Still valid today. A portion of what he said was, hey, you have a trend, an uptrend, as long as you continue to put in higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. You got a downtrend if you're putting in lower lows, lower highs, lower lows, lower highs. That's really helpful because when you're in a trade and it's going up, it pulls back, right? Remember I talked about the Bank of America trade I was in. I was so stressed out with a winning trade because price would go up and then it'd pull back and go, oh no, is it over? Is it over? Well, we got tools here to tell us when it's over. An uptrend is over when it fails to put in new highs and takes out previous higher lows. That's when the trend is broken. That's when you want to get out. So Dow theory gives us a tool to manage stops. We put stops at these higher lows as the trend goes on. We let the trend take us out, and we stay with it for as long as it'll run. In a downtrend, lower lows, lower highs, lower lows, lower highs. Fails to put in a new low, goes and takes out the previous lower high. Bearish trend's over. So that's a useful tool and definition that I apply. So I use Ichimoku Cloud, I use Elliott wave, Dow theory, and like a couple simple indicators on my charts. I do use a 200 SMA as an important final qualifier for a trade, and a price momentum oscillator, just to help me identify wave counts and see if there's divergence in the trend. So I said, I think you need 3 things to be consistently profitable trader. I talked about great trade setups. You need those. I talked about the tools I use. You also need risk management. You need a way to control loss, right? I think this is more important than your trade setups. You got to determine how much you're willing to lose on a trade. And that has to be a pain-free level, an amount that will not be a setback, right? That you could continue trading and not be freaked out, right? I use 2%. So I am willing, I'm not wishing, but I'm willing to lose 2% of my account on a trade, no more. And I think you have to determine your stop loss price by price movement. I don't believe in arbitrary, percentage based or dollar based. Well, I'm going to get out if I lose $500, because on one trade that may be completely normal, part of the normally distributed data, right? Normal volatility for a stock. So I think it's important to set your stop loss price level first. I use Dow theory, set it at key support or resistance levels, previous higher lows or lower highs. And then I determine my position size by the entry minus the stop, right? So for example, I got a $100,000 account, 2% is $2,000. That's what I'm willing to lose on the trade. I divide my stop. I subtract my stop from my entry, divided into $2,000. It gives the position size, right? What that does is if my trade hits the stop, I'll lose 2% of my account, right? So I use the stop first and then determine the position size. I don't use a fixed position size or an arbitrary trailing stop based on percentage. I like to use the reality of the charts. I said. And you got to have great trade management. If I could discuss how to get out of stop loss market makers, stop hunting. Well, if you're concerned about that, and if you have the discipline, all you have to do is set an alert, right? Set an alert at a stop level, and if it gets hit, go close the trade. The problem with that is not everybody's disciplined enough to actually do it. When the alert goes off, they start second guessing themselves. Well, let's see if it comes back, right? So if you're concerned about market makers hunting stops, use an alert and don't place the order until the alert is hit. That's one way to deal with that. But again, you have to have the discipline to execute on that. Or you run the risk of getting into the downward whirlpool of misery of being in a losing trade, and it goes down and you think it'll come back and it goes down some more, and pretty soon you're at a point where you go, well, that's too big a loss. I can't get out. I'm stuck. And now you're holding a lousy position for a long time with your capital tied up, and you feel awful about it. That's the whirlpool of misery. You don't want to be there. You got to have great trade management. So you got to have great setups, great risk management, great trade management. And you can get into a great setup. You can have great risk management. You can still lose money if you don't manage a trade. And I think it includes taking profit at the right times, adding to the position strategically when their rules are met. And I got a method and a calculation method. We never double down on losers, but we will certainly add to winners. Staying with a winner for as long as possible and exiting the trade at the right time. These are all part of trade management. And again, I use Dow theory. You can see these white arrows as I'm trailing my stop up to key support and resistance areas and letting the trend run, letting the trend stop me out when it's over, and then getting back in. So this is a wave 3 trade. Then there's a correction, and then wave 5. We traded both these legs and did really well on this chart on a veil a while back. Casey, what's the smallest chart to use for day trading? You know, when I'm watching intraday price, I like to do two things. I like to look at like a 2-minute chart for intraday, and then I look at a range chart. I'll show you real quick. We got a little time. I use a range chart because range charts, you know, show price only. They have time taken out. So I look at the big trend. Here's my futures intraday chart. Here's the E-mini gold and oil. So the top is 10-minute chart showing the big intraday trend. I wouldn't trade off a 10-minute chart intraday. I can click that down to 2 minutes. But the range chart here, like on the ES, I got five tick range. On gold and oil, I'm using 8-tick range. They show pure price movement without time, and that is where you can catch big movement. So I like a tick chart or a range chart. It's similar to a tick chart. And then like a 2-minute for intraday. So that's a little bit of an aside just to answer your question. Amit, no problem. Glad you could jump in for a while. Casey, click, you got your hand up. Was that it? Answer your question there? All right, so I'm going to keep rolling here. I want to get to the trades, right? So this is trade management, right? Yeah, you bet, Casey. Glad to answer your question. Anybody else, you know, use the chat box and jump in with any question anytime. All right. So when I'm scanning for trades, you know, I get asked a lot, how do you find great trades? You know, there's thousands of stocks. I primarily trade stocks and options, and there's, you know, thousands to choose from. How do you find that needle in the haystack? So what I do is I create a big picture. You know, just step back and look at the big picture. What's going on in the overall market, and look for some information that may be new. And from that, I create a thesis, you know, a theory, a guess, right? And then I use my thesis to narrow the big list, the entire market, down to a manageable list. And then I start looking, right? Scanning for trades, finding trades. You can find ways to make it more efficient. You can find ways to help you. But at the end of the day, it's hard work, right? You got to put some screen time in looking at charts. So I do that, you know, I have my trade setups in mind. I go scan for trades. So we're going to do that. We're going to go look. I'm going to talk about my current thesis. We're going to go start scanning for some trades. Okay, and then afterwards, I'll be happy to analyze any symbols you're interested in. You're going to see my charts here in a minute, Caesar. I'll show my my indicators on my chart here. We got to get some symbols to look at first. So let's go look at some charts, right? Let's find some great trades. So I use TradeStation as my charting platform and as my broker. I'm pretty happy with it. It's not the only good one out there, but it is a good one. So let's start. This is Radar Screen, where we can get a list of symbols and run some indicators against them. But I'm going to start with my thesis, right? And I'll get to those symbols in a bit. But let's try and find some first here. Find some of my ideas, and we'll go look at your ideas. So let me bring a daily chart over here. You know, if we look at the indexes, here's a great trade. This is a good example of one of the setup I'm looking for, by the way. This is Calumet Specialties. We closed this trade, but I said I like to catch new trends. We caught this thing at $5, took it up, trailed our stop, higher highs, higher lows, trailed our stop up until it got stopped out about $7.99. And we actually took profit. We had an initial target at 930. We took profit above it, and then we ended up getting stopped out down here. So Calumet Specialties, you know, from $5 to taking profit at 9 over 9 and stopped out at about $8. That was a stunning win. That's like 40% winner. That's the kind of trade I'm looking for right there, pretty quick. But let's look at the S&P 500 for a minute. So here's the S&P 500, up, up, up and away, right? No end in sight. I've been, you know, like most people, just kind of watching this in amazement, going, really? Well, the reality is it's still going up, huh? So I'm long some stocks and participating in the overall market trend going up, but I'm also a little wary, right? And I also know that there's some sectors, you know, there's such a thing as sector rotation, where money will move out of one sector, institutional and the retail traders, you know, after there's been big growth in one sector, they'll take their money out and move it over to another. And I like to see, you know, what sector is money coming out of, maybe. And I'm a news junkie. I read tons of articles. I don't trade based on what some analyst says, but it can draw my attention to particular sectors or particular companies, because all my trading is going to be based on the realities on the chart in front of me and whether it meets my criteria. But all these inputs can bring my attention to various areas. And as I've been reading articles over the last week or two, I just keep hearing people talking about sector rotation in tech, that technology's had its run and it's starting to head down. So I'm going to use that as a theory this morning. I'm going to say, okay, let's see, is that true? Is money coming out of tech? Is the tech sector getting ready to come down? No, William, I don't use a money flow indicator. Nope. So let's use that as a working theory that we have to go prove then and say, if money's coming out of tech, right, we ought to be able to find some good short trades. So let's start with that. Let's see if we can find any good short trades in the technology sector. And so I like to use manageable lists. And so I'm just going to scan through a couple different symbol lists here. And I'll pull the first one up. I'm going to go ahead and insert symbol list. We're going to start with this one. I think. There we go. CBOE technology, 25 stocks. Let's just take a little sample here. There's 25 stocks. This is the CBOE tech index, big tech leaders, right? See what this has to say. Yeah, I use TradeStation primarily for my scans. I've got 3 or 4 major approaches. I'll go look at the spider ETFs, right, and look at the various sectors. And then with the spider ETFs, you can download the actual symbols in their ETF. And I do that sometimes. I'd use FinViz occasionally. I use it mostly for the heat map during the day. So a variety of tools, but my main tool, my main platform here is TradeStation. I'm going to show you a scan that I wrote last night in a minute too. So let's look at this this list here. And Greg, did you have a question? I see your hand is up. Go ahead and type it in if you got a question. All right. So we got 25 symbols here, and what I've got is an indicator that I wrote for 200 simple moving average. All I want to know is price above the 200 or below it, because that's a first kind of gross level qualifier. I don't really want to take short trades above the 200, and I don't want to take long trades below it. It's a pretty significant resistance area. And then I'm looking at the Ichimoku cloud, right? What's the trend direction? Where's price relative to the cloud, right? So ideally for a short trade candidate, let me just sort this. So we started off thinking about short trades in tech. I want to see it below the SMA and below the cloud. So I got two candidates here, SYMC and TWX, both of them. And I also want some liquidity, right? I want a fairly good sized stock, right, that trades with liquidity. I'm also going to look at how long has it been. This is, again, this indicator I wrote. How long has it been since it crossed the 200 SMA? Because if it was a year ago, that's not new news, right? But a new trend, if it recently crossed, and I also look at how close is price to the 200, because I am not a trend follower. I hate chasing mature trends. There's momentum strategies to do that. I hate it. I want to get into new trends, new corrections, or new continuations. When I look at a chart, right, the last thing I want to do is like the S&P 500. I don't want to go long the S&P 500. That's chasing a trend. So that's my own personal thing. So here I'm going to look now at SYMC. Hopefully you see how I use the radar screen to scan pretty quickly there through a whole big list and narrow it down to something that met my criteria. And this is exactly what I'm looking for. I'm looking for a correction. We know tech's been running up, so this is semantic. And what I'm looking at here is Elliott wave, right? This is wave 3. This is so easy to see. All wave 3 is a big impulsive price move, big dramatic price movement. Now we see a correction tried to form here, failed, it went on to new highs. Now look, it's down below the 200. Look how it found support at the 200. Put in a couple lows here. Now we're below that. So this is really interesting. Big move. Now we got a pullback beginning, taking out previous lows. It's in the new territory. And I can use a Fibonacci retracement tool, and I can project where that correction should go to. Okay. And what we expect is this correction to go down into this Fibonacci retracement zone between 38.2 and 61.8. So it's got a little room to go. It's got a little room to go. And it had a little bullish divergence. Good eye there, Ottaviano. Good eye. We had a little bullish divergence here, but now we've got growing negative momentum in the price oscillator. So I'm not worried about that. On this trade, I would be looking. Remember I talked about, risk management, and you got to identify your stop, kind of one of the first steps for a potential trade. So we got, lower lows, lower highs, lower lows, lower highs, new low. Stop goes above the last lower high right there. That's where I would put my stop. If we were to take an entry on this thing, it would be right here. And now our target is in here. So if we were to be conservative and place our target at the very top of the retracement zone, you can see that's about a 1-to-1 reward to risk ratio trade. 1-to-1. The distance between the entry and the target and the entry and the stop are about equal. Now, if you think this is really high probability and it's going to go, maybe halfway into the zone, now you got a good reward to risk on the trade. So you have to decide, whether you want to be super conservative or a little aggressive in your target management here. Yeah, the oscillator I'm using, it's called the OWL, the Optimum Wave Locator from Traders Coach. It's an awesome tool. I like it a lot. So this one's a possible candidate. I would like to see a better reward to risk ratio on the trade, but it's okay, right? Again, I would like to see a good reward to risk up here at the edge of the retracement zone. So even in the, even if it's a 30-week retracement, I still want good profit potential. But that one's worth looking at. That's, we can keep it on the list. See if we can do better though. So the next one here that's below the SMA, below the cloud, is TWX. Let's see what we got with this one. So this looks like a pretty similar pattern, but this is Time Warner. This pattern looks really similar. Same story, pretty close. Pretty close. We could put our stop here. It hasn't put in a new low, but that's a significant pivot point. Lower low, lower high, it's heading down. So we had our stop there. If we had our entry here at the last price, we are under the cloud, we are under the 200. We have growing, massively growing downward momentum. And if we were to put our target here, that's a pretty nice, that's about a 2 or 3 to 1 reward to risk ratio on that. Are you late? Yeah, a little bit. We started at 8 o'clock Pacific. But no worries. This is recorded too if you want to go back and look. Ottaviano, what's the value of SMC? Which value are you talking about? SYMC. So the stop would be about 29.37, entry at current price. Target would be, what is that, 26.66. What's the stock worth? It's worth what people are paying for it, 27.98. And the trade looks like it has about a $2 or $3 profit potential. So about 10%, 10 to 15%, not great. So we were on TWX. That one looks a little better. So that's a candidate. TWX is a candidate for a short, a little bit better. It's a nice setup. Pretty high probability trade. Okay. Now I did a little bit of previewing last night, and that's kind of the end of the good stuff there in the Reuters or the CBOE list. So let's pull up a different list. Let's get rid of this one. There was only 2 candidates here, right? Because this one here was above the cloud. So there's only 2 candidates. We looked at them, and not a bad scan, right? The 2 that it identified came out to be okay. Caesar, what's the success rate of Tenkan Kaijin Cross? No idea, because that's only one of several criteria I use in identifying a good trade. I don't isolate that as one thing. Next, let's look at the semiconductor. Let's insert, again, my whole thesis was I think there might be some weakness in tech, so I'm just looking at some various areas here. Let's go Reuters, industry, technology, semiconductors. Pretty big list. Yeah, we'll get to your symbols in a little bit here. Let's let this list get populated real quick. In fact, we'll do that while it's filling in that data. Let's go look at Intel for Casey. I don't know if you were here earlier. I worked for Intel for quite a while. What a great company. What a great experience. They made me grow so much. I learned so much. It was a fantastic experience. But like any job, Intel was really fun when I joined in the early 90s. One of their mottos, I was a manager in a factory, one of their sayings was, hey, don't ask permission, ask forgiveness. And later on, when they got to be a big company and joined the Dow and all that, they said, yeah, why don't you go ahead and ask permission? That was about the time I left. So here's the big move up. It's been really impressive on Intel. It's starting to correct. This is all wave 3. This looks like a 4. By the time it breaks the cloud, breaks support, and really confirms it's heading down, there's not much Not much meat left there on the bone, so a little tough to trade Intel right now. If it does come down into the correction zone and then show some evidence of turning and heading back up, there might be another wave 5 up. All right, let's go back to our scan. Click the data is populated now. I'm going to go ahead and sort this on price position above and below the SMA. There's what I want. And now we're just going to start scanning. Now this one isn't filtered by size of the company, so I kind of have to. I don't want to get involved with thinly traded, you know, this 10,000 shares per day or 1,400 shares per day. I don't want to trade these little thinly traded companies. You know, it can be hard to get in, and worse than that, it can be hard to get out. When I want to get out of a stock, I want a market there to get me out. All right, I want somebody buying my shares. All right, so I'm going to look at, make sure it's got some meaningful volume, and then also how far is price from the SMA. If it's 200% away, it's kind of late. You kind of missed it. And how many days does it cross? That's all these things I'm going to be looking at here. So let me pick out the first one. And also below, so that AMD kind of meets all that criteria. Let's see what AMD looks like. Caesar, I do not use the Chiku line in my Ichimoku Cloud. With the method I'm using, I don't find it useful. Okay, AMD, well, I can see why it showed up on the scan. Makes sense, but it's really already, here's wave 3. You can see I've already analyzed it a few times. Here's the retracement zone between these two blue lines. That's 38.2 to 61.8 Fibonacci retracement. It's already there. It already hit the retracement zone. There was a good trade right there as it broke the cloud. That would have, and broke the 200. That was where the trade was. That would have been pretty nice. And that would have gone from 12 bucks down to 9.94. That's like a 20% move. Nothing wrong with that. 20, 30. That would have been a good one, but we missed it. So it's too late. I'll keep looking over here on the radar screen and see what else we got. Let's take a look at JBL. Oh, well, I like JBL as a short. Here's and you can see I've looked at it before. I've got some lines drawn here. Here's the big move up. This is wave 3, big impulsive move, beautiful. And now we got a nice correction starting. Lower lows, lower highs, lower lows, lower highs. Breaking down below the Ichimoku cloud. It's down below the 200. And we got a target zone down here, 38.2 to 61.8, right? Even if we took an entry here, our stop would be, you can have an aggressive stop right there, right? And a target here, just inside. That's a nice 2-to-1 trade, right? And if we took our entry at 27, we're going to 26, and not a big percentage move, but that's not a bad trade. And if you're trading that with a put option, you could do pretty well. It is wave 4. That is. This is 3. This is wave 4 that we would be trading. Absolutely right, Barry. Look back over here at my list and see what the next one is. Yeah, this is a pretty good scan. RTEC. Kind of the same thing. And I don't know, I've never heard of this company, Rudolph Technologies. They're right at the threshold of the volume. I would want to check and make sure that their average daily volume is at least 200K, preferably more. But this is a wave 4 as well. Looks really similar to the last one, doesn't it? Almost identical charts. This one is a good possible candidate, maybe. Yeah, we got room down to the target here, so that's a possible trade. RTEC, a little concerned about the volume. I would want to be watching that, okay? So those are some of the top ones from the scan in semiconductors. Let's go look at one more category here. What I'm going to do now is, as I was doing this, I got pretty interested and was finding some of those smaller companies. So I decided not to limit myself to technology. Let me get this data off here. Last night I was playing around and I wrote a custom scan using the TradeStation scanner, and I'll show you what that criteria is. So I simply wrote a scan with the criteria of, oh, I'm looking for shorts, right? I'm looking for things, the overall market's going up and I'm long some trades. I want to see if there's some new short opportunities. And so if I'm shorting, I want it to be a big company, right? And I want, start here, let's have price be over 50 bucks. So I want price over 50 bucks. I want an average daily 10-day volume of at least 1 million shares. I want to trade big companies because I want there to be a viable option market, because I want to short with buying puts. So price over 50, average volume over 1 million shares a day, market cap over 1 billion. And then what I'm looking for is, hey, how many days since the SMA, the 200 simple moving average, crossed? I want less than 15. I want a pretty new trend emerging, and I want price to be less than 10% away from the SMA. So I want a really new trend forming, a new different trend, either up or down. And so I ran this scan takes about 10 minutes to run because it goes out and looks at 6,000 stocks. I don't want to run this yet. I already ran it last night. Now we've got the data. Let's pull it in, right? And so this is based on Friday's close, so this is pretty cool. So I'm going to pull in a custom list. There it is. Yeah, the SMA input I'm using in Radar Screen here and in that scan. This here is a custom indicator that I wrote. I actually defined it and had a guy write it for me. I'm not a good enough programmer to actually write that. It is not publicly available yet. It might be, though. I might make it available once we do a little more testing on it, but it looks like it's working pretty good. Okay, so I got a nice nice list here. It found, what, 68 companies or something that met all that criteria. This is a good list of things to look at here. So let's start looking at what we got. AGG, kind of excited, right? Now this is different. AGG is different than those other ones. This is a different wave count, and this is exciting. Only a trading geek can get excited about a chart, right? If we look back at one of our other candidates, JBL is a wave 4. It's had the big move up. Now we're trying to trade the correction. AGG is a wave 5. So here's the big move down. It has already had the correction up. Now it's heading down. This is a more highly probable trade. Why? Well, because instead of having one wave before, we've had 2 powerful waves, giving us more confidence and more probability that this pattern really is going to continue. So this would be, there's wave 3 down to the bottom, right there. Perfect wave 4. So this is 3, perfect 4 right into this correction zone. It's exciting. Now, where is the target for wave 5? We use a Fibonacci extension tool to project where wave 5 will go. Look how much room we've got to the target. Man, this is great. It's below the 200 SMA. It's below the Ichimoku cloud. It's got a really clear wave structure. We don't really have increasing momentum here yet, but we do have, on a big picture, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Channeling a little bit here, consolidating, but a pretty clear picture of it going down into this target zone. So you could take the trade now, right? All the criteria is actually met. You could take it now, or you could wait. If you want to make sure that the thing starts moving and it's not going to stay in this consolidation, is take it when it puts in a new low. Let it put in a new low. If it does that, and if it takes a while, go use your capital somewhere else. Use this last high as a stop and the target down here. Horizontal lines are great tools. When I get into this, I actually color these lines, but this got like a 3-to-1 reward to risk ratio. And that's pretty big profit, right? That's pretty big move. So I'm kind of excited about AGG. I like that. That's a good one. I'll look back over here at my list. What's another one that meets my criteria? Bud, Anheuser-Busch. Oh, this is a wave 5 too. This is awesome. Boy, look at this news here, this move. We want to tap into one like that short, don't we? Every day, pretty much. Bam, 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 bam. I love that. Well, it went a little high. This is volatile. It went above the 76.4 before heading down. So Bud might have a little problem here. This may not be good. Boy, that's a sharp move, though. It did break the rules. You got to have rules, right? If you're not going to follow rules, you're not going to be a very consistent trader. IR, Ingersoll Rand. You know, I've traded IR a couple times. Now, this is nice. This is wave 4. This is really good. This is probably the best wave 4 we've seen all day. Yeah, nice room down to the target. So that one gets a star next to it. We're going to write that one down. Okay. I'm going to look for longs on here too. Since we got this scan, again, the overall market is going up. So let's don't ignore that reality, right? And this one meets all my criteria kind of nicely. BTI. BTI looks like a nice wave 5 up. Wow, what is this? British American Tobacco. Well, depends on whether you are a socially conscious trader, whether that is part of your criteria or not. But there's a nice wave 5 long setting up here on BTI. There's wave 3. There's the correction. Here's wave 5. Yeah, tobacco companies got a pretty good business model, all but the part about killing your customers, right? That's bad. Nice target up above 72. Did you see it there, Greg? I know you're asking about demonstrating the wave. So like on this BTI, here's wave 3. It's the biggest move. All you gotta do is identify the biggest move on the page. Pretty sharp correction, but nice, right into Fibonacci 38.2 to 61.8. Now we've got clear evidence of the next move extending up here between Fibonacci 61.8 and 100%, these green lines. And it's up above the 200, it's up above the Ichimoku cloud, and we've got positive momentum. There we go. That all stacks up, just putting in new highs. This is a pretty nice trade right now. Okay, well, we've identified a nice handful of trades. Didn't take long, wasn't too much work, right? We got BTI long, IR short, AGG short. Look back at my notes. SYMC, TWX, JBL, RTEC. That's a pretty good basket of trades. All right. Barry, yeah, I'm looking primarily at daily charts here. There are some that we can look at for 60 minutes. You can use this method on any time frame. Yeah, I'm looking here. I start off with about an 18-month look back and then adjust, right? Every chart's a little bit different, and some are going to have longer impulsive moves, some are going to be shorter. So I adjust my scaling here until I can see a picture. That's what I'm trying to do, is see a picture. I want to know when a trend began. I want to know when it ended. So every chart's a little different. There's a bit of an art to getting just the right amount of data on your screen to analyze. Jody, what's my favorite day trade time frame? Yeah, I don't day trade. I do run a trading room in the mornings, and we do watch markets intraday. We look for new trades on daily charts, 60-minute charts, but I don't place intraday trades. I was talking earlier on my intraday charts. I actually like range charts. So I look at the, if I were trading intraday, I would use the 10-minute as the big trend. I wouldn't trade based on 10-minute. It tells you what's the big intraday trend. But then I would trade based on range charts. On oil and gold, I like an 8-tick range. On ES, I like a 5-tick range. No time involved in range charts. They're kind of like tick charts. Strictly price movement. So those are pretty good for intraday trading. Bob, looks like you got a question. You got your hand up. Yeah, so let's go ahead and take a look at a few of your trades now. We got Disney. I know some people typed them in earlier. I can't get back to those, so type them in again if you got them. But let's look at Disney. Paul, yeah, it's not tick. It's range chart. It's a range, and for ES, I like a 5-tick range, and for oil and gold, I like 8-tick range. 5, 8, and 8. Okay, Disney. So Disney had a big impulsive move up here, too deep of a correction. Now so Disney is a chaotic chart. One of the things that frustrates people when they try to use Elliott wave, you can see I've analyzed this many times. I got lots of lines on here. We clean all these up. One of the things that frustrates people about Elliott wave would be a chart like Disney, where they would come stare at it and go, man, I just cannot get the wave count down on this. What is it? And the reason you're frustrated and the reason you're struggling to get a wave count is because there isn't one, because it's a mess, right? So I don't mess with messy charts. It's a chaotic, volatile stock. This is not the happiest chart on earth. So I wouldn't touch it, basically. BA for Greg. BA is like this looks like the glide slope, right, for a fighter jet, doesn't it? Is that an apropos simile for Boeing? What a great trend. I said earlier, if you were here, I loathe chasing trends. I will not get long on something like this. I just won't. It's too late for me. I'm trying to catch new trends and trade them, or when they correct, catch them then. You know, there's methods out there to momentum trade trends. It's not for me, because when's it going to end? We have no idea. And so I just don't chase trends. So I can stand back and admire it, but I won't touch it until it begins to correct, and then I would take the correction. We don't know when that would happen yet. No signs of it yet. VLO. Same deal. Beautiful trend. Too late at this point for me. NVIDIA. So we were talking earlier about possible correction beginning in tech. This is a nice candidate. It broke down through the Ichimoku cloud. It pulled back up. If it did that one more time, we got the 200 way down here, right? But there may be room, even if it found support at the 200. If it broke one more time, I'd be interested in a short on NVIDIA. If it breaks and puts in a new low below this low. If. Hadn't happened yet. DKS for Peter. You're welcome, Paul. So Dick's Sporting Goods. So let's see. So I say you got to get enough data. So this is the big move right here. This is wave 3. This could be beginning a bullish correction. So your price target on Dick's is up here. Now you got the 200 in the way. So you have to go, is there enough profit even if it's stalled at the 200, right? And the answer is probably yes. I'm going to make a note of that. That's not a bad one. DKS long. So Peter, put a star next to your name. Thank you. Gina, Amazon and FedEx. This is awesome. We've done a webinar here where I'm offering to analyze stocks, and nobody has asked about Apple. You guys are awesome audience. First webinar ever. Amazon, again, beautiful trend. You know, great company. Jeff Bezos, smart guy. No sign. It's too late for me to get long. And, you know, who knows? Maybe go to 2,000 from here. I don't know. But I just do not chase trends, and it's too early to try and short it. So no trade for me on Amazon. I'll give you your double there, Gina. FedEx. Same story. Beautiful trend. Awesome. Just too late to get long, too early to get short. Virginia. I'm so glad you're able to get in, Virginia. Sorry you had trouble before. We'll definitely want to analyze your chart here. Avadel Pharma. Now here is one to watch really, really close. So it's had obviously a massive move down, and then actually that was actually a 4 up, 5 coming down, hitting an asymptote here at the bottom, right? That's why I like higher priced stocks to short, because at some point you get close to zero and it's going to flatten out. The thing to watch for here is a break up. This trend will end down. Either it will end or it will go out of business. But if this breaks above the cloud again like this, and what you want to see is a break up, a pullback, and a new break, that could be a new trend beginning, and that could be really, really good. So watch for that. It's too early. It hasn't happened yet. But if you do get that pattern, I'll draw it for you here. If you get a pattern like this, where it breaks above, that's a lousy drawing. You know how hard it is to draw with a mouse. If you get this, that's a nice trade. Take it there. I would. Put your stop there. That could be a rocket. And these kind, you know, making 50%, 100% on them is totally realistic. So that's worth checking out. Not yet, if that happens. There you go, Virginia. Yeah, looking for a reversal. Yeah, and this would be a beginning of a new 3, right? And this is really hard to establish a target on a new trend. What I would do would be look at this previous high and say, what if it hit resistance and couldn't get above that previous high, and use that as a reward to risk ratio. It's not really a price target. It's just saying that's where the trade could fail, and would I have sufficient profit, sufficient reward to risk at that level if it hit that and failed. And you know, if you took an entry somewhere about $11 and it failed at 15, yeah, that'd be worth it, definitely. Penelope says Netflix is a potential short. I'm not going to be able to get to all your symbols, unfortunately. Appreciate your interest. Netflix, it could be breaking down. If you look through this whole year, the cloud has predicted support pretty well. It broke it once here. It's breaking it here. So this was one break, right? Broke through it, took off. If this breaks here and then goes up and comes back, it's that same pattern we were talking about in reverse on AVDL. If we break up, new low, potential short, you got the 200 in the way. But when trends change, they got to go through it, right? They got to cross. So that's a potential, that's a good one to watch, right? Andy, I do check volume before I take a trade. My minimum liquidity is 200,000 shares a day. I actually want more, right? But yeah, I'm just analyzing the charts here. Before I take a trade, yeah, I have a minimum volume threshold. Okay, well, hey, we're getting pretty close here to an hour, and I wanted to keep this to pretty close to an hour. So next, we looked at some charts, we looked at some symbols. I actually found a couple there that I liked, Dick's Sporting Goods in particular, right? So here's just a reminder. I think these 3 things are just critical if you're going to be a consistently successful trader. It's great trade setups with high probability outcomes, great reward to risk ratio. Got to have risk management, got to have trade management. So I just ask you guys, do you agree? Do you agree that those things, that having these things will help make you a profitable trader? Who would agree with that statement? 100%. Thank you. Absolutely. Great. Okay, so can I ask you a question, right? How many of you are excited about some of the trades we just looked at? We found some good symbols, I think, some good good setups with high probability outcomes and good reward to risk ratio. But are you a little bit unsure about what to do next? Do you feel maybe a little bit like this dude, right? It's like, wow, that was a lot of information. Some of those trades got me excited, but I'm not sure what to do next. So how about if it would spend a couple minutes here and I'll go over just a special offer related to what we just talked about. So what I'd like to do is this. I can provide, right? This is what I do in my stock pick advisory service, my trading room, right? Is I give great trade setups with high probability outcomes, good reward to risk ratio, risk management, trade management. You know, what would that cost to go buy that individually? You know, if you were to hire me one-on-one or other educators, right? If you were to get, you know, winning picks, and my picks, I showed you the resume, the results on my website. On a 100K account, they're averaging about $1,900 a month, right, in return. 4 hours of detailed trade consultation per month, about $1,200, right? One-on-one consultation, an initial one, $1,000. Ongoing education, right? Buying courses from me, other people, you know, $1,200. That would add up to about $5,300 to be able to act on these trades according to the methods I'm using, and to consistently generate these kind of trades, right? So I'm going to offer you great trade setups, great risk management, great trade management, and it's not going to cost you $5,300. Okay, I'm going to offer it to you today. You can try my stock and option picks for a month, for 30 days, for $37. I'm going to go ahead and post a link in the chat area for you. And you can see it's typed out there. If you don't see the link in the chat area, I did create a tiny URL, which is FMT 30-37. Paste it, so now you've got the link. Okay, so 30 days of my stock picks, 100% money back guarantee for that 30 days. If it's not a good fit for you, all you gotta do is send me an email, call me and say, hey, Dean, just wasn't a good fit. I'll give you 100% of your money back, no hard feelings, no questions asked, right? I want, you know, I occasionally get a customer who says, hey, it's just not a good fit. And say, hey, no problem, right? It's not for everybody. You know, we're all individuals. Most people are pretty happy with it, and they're making money, and they stay with it, right? I'm offering you a huge discount, right? The list price on my website for this, it's $127 a month for the stock picks. Right here, stock picks are listed at $127 a month, right? That's a good value at that. So I'm offering it to you $37 for 30 days, and then a discount $97 per month after that, as long as you stay subscribed. It includes a free one-on-one consultation with me. I have some great picks. Some of the ones we looked at today, we're going to be publishing to the subscribers. I've got some open trades now that still have really good entries. And we have a Wednesday night chat session. So every Wednesday night at 6 p.m. Pacific, 9 Eastern, we have a live chat. We log in just like this, look at the existing trades, make any adjustments, review the charts, talk about new picks, and answer questions. So you get a one-on-one consultation, email support if you have questions, and a weekly live chat session for support, and about 1 to 2 picks per week. And I showed you the results on my website, the results we're getting year after year. What's my hours for this, Peter? I'm not sure I understand, right? Oh, great question, Greg. Our options incorporated. So I'm glad you asked that. I forgot to bring it up. What I do is all my analysis starts here on the chart, right? So when I get a stock chart, if I can find my chart, right? I'll give you an open trade that we're in right now. Let me pull it up. This is a nice trade. This is Electronic Arts. We are short. And you can see, so for every trade I publish, an entry price, it's this blue line, stop price is this red line, and a target that's this green line. So EA short right now is a great trade. I publish the entry, the stop, the target, and then we trail the stop. We take profit. I give updates via text message or email, whichever you prefer. As we manage the trade, we take profit, we trail the stop, and as we close it. I also offer I like to trade it with options. So I say, here's the option contract that we would be trading that with. I give the expiration date, the strike price, and the premium, and that we're willing to pay. In Electronic Arts, we're using the March 120 strike put. In the trading room, yeah, it's different than what I'm offering here. Trading room's a different deal. Trading room is 9:15 to 10:45 Eastern, hour and a half, right at the open. And we just look for new trades, manage the open trades, different service, different set of trades, a little bit of overlap, but different service. Yeah, you're welcome, Greg. Andy, do I know any software for portfolio management, position sizing, tired of Excel and a calculator? Check with traderscoach.com. They have a trader's assistant that is a software for trade size management and portfolio management. Traderscoach.com, ask for the trader's assistant. They're great folks. I work closely with them. So I'll go ahead and post that link one more time. And happy to take any other questions that you have. Again, 30 days, $37. You know, so far we've had winning stock picks. You get 100% money back guarantee, option trading information or share trading, free one-on-one, it's included one-on-one consultation with me, weekly live chat sessions, pretty good. Casey, you've been focused on ES, how much money is needed to trade stocks? You know, I recommend at least a $10,000 account. At least 10,000 to really participate in stock trading and be able to buy. I like options, right? So Penelope, what software do I like for back testing? TradeStation's pretty good. I haven't used it, but I've heard a lot of good things about Trade Navigator. The Trade Navigator, you don't have to be a programmer. To do back testing in TradeStation, you have to be able to write code. I've heard Trade Navigator's really intuitive, kind of drag and drop, and you can create scenarios and strategies and back test them. So that's one to check out. Betty, hey, you're welcome. Glad you were here. Caesar, thank you. Trading platform is TradeStation. Paul Klein says he's using Navigator. Cool. Metastock has a good back tester. Nice. Ninja, is Ninja good for this? Yeah, you can use Ninja Trader to follow along with my trades. Absolutely. All the indicators I use are available in Ninja. Great questions. Yeah, Thinkorswim's a great platform. A lot of my customers are using Thinkorswim, Bob. Oh, well, thank you, Casey. That's a nice comment. Andy, do I use Voodoo lines from JC? Never heard of it. Hey, Phil, did you have a question? Yeah, Penelope, thank you for coming. Thank you. Pilgrim, no, I do not use ATR trailing stop. I trail my stops based on actual price movement on charts. I talked about it earlier, right? I trail them, using Dow theory. When we put in a higher high, higher low, new high, I trail it according to that. Phil, this is recorded. The PowerPoint, I'm not sure if that would be helpful, but this is recorded, and I'll be sending out a link to the recording afterwards. Hey, thanks, Cesar. Thank you. Ottavianero, hope I'm saying your name right. Ottaviano. Awesome, Jody, great. Okay, I'm gonna go ahead and wrap it up. Hey, thanks everybody for being here. Virginia, Oh, good. I'm glad you like that. Yeah, the risk management is so critical, so critical. Thank you, Pilgrim. Everyone else, I'll be emailing the recording out. It'll take a couple hours to get it rendered and set up and all that stuff. So, hey, have a great rest of your weekend. Trade safe. Use risk control. Keep your winners big, your losers small, and hope to see you at a future event. Thank you. All right. Bye-bye.